Do you need 20% down to buy a home? No, you don't, but many people still believe this. It's one of the most enduring misconceptions about conventional loans and has probably kept millions of people from looking into buying a home. After all, 20% down on a median-priced home in the US right now is about $80,000, and who has that lying around? And even if you had 80 grand sitting in a savings account somewhere, it's probably not the best idea to sink it all into a down payment. Today's conventional loans require just 3% down, not 20%. Let's talk about the popular Conventional 97 program where you can finance 97% of the home price and put down just 3%. So how do you get one of these loans? Let's find out. These loans generally follow the same rules as all conventional loans, with a few additions. Here are some guidelines. First-time home buyers only. The home must be your primary residence. Homebuyer education is required. 620 minimum credit score, 45% debt-to-income ratio. Mortgage insurance is required, and fixed-rate mortgages only. And some programs come with income limits. And perhaps the most important requirement is that you need a 3% down payment, or $3,000 for every $100,000 in home price. Does this money have to come from your own pocket? No? Let's find out how to get your down payment. You can get a conventional 97 down payment from a variety of sources. Personal funds like savings and checking accounts, 401k loans and withdrawals, gift funds from relatives, down payment assistance programs, and eligible secondary financing. Beyond your down payment, you'll need money for closing costs to cover things like the appraisal, title insurance, a credit report, lender fees, and real estate agent fees. Another source is closing costs help from the seller. In buyer's market, sellers may be willing to pay for some or all of your closing costs to sell the home quicker. It's not uncommon for the seller to kick in thousands in assistance. So where do you find a conventional 97 loan? Most lenders in the US offer the conventional 97 mortgage. They may even offer a few other conventional 3% down programs. 3% down conventional loans can be better than FHA for some home buyers. As a rule of thumb, buyers with higher credit scores might do better with conventional 97 than with FHA, and that's for two reasons. First, you can cancel conventional private mortgage insurance, or PMI, when you reach about 20% equity in the home. Second, conventional PMI is about the same cost as FHA mortgage insurance for those with higher credit scores. According to FHA guidelines and mortgage insurance provider MGIC, here are cost differences at various loan amounts and credit scores. For buyers with credit scores below about 720 might pay more for conventional mortgage insurance. These buyers might save money each month by using FHA. Those with credit scores in the 660 to 700 range will save a lot of money because FHA doesn't charge more for its mortgage insurance if you have a lower score. And though FHA mortgage insurance is permanent, buyers may be able to refinance out of it later. Conventional 97 loans allow you to have a debt-to-income ratio of about 43 to 45%. What that means is after you buy a house, you should be spending less than half your income on the house payment and monthly debt payments. For example, if you make $8,000 per month, you may qualify for total payments of about $3,600. If you have high debts or need to stretch your home buying budget, look into FHA, which allows for higher debt-to-income ratios. Conventional 97 isn't the only 3% down conventional option. Here are some others. Fannie Mae Home Ready is a 3% down option that allows roommate income, non-occupant co-borrowers, or income from an accessory dwelling unit. You must make 80% or less of your area's median income. Freddie Mac Home Possible is another option. It even comes with lower mortgage rates for moderate income buyers. To qualify, just contact a lender and request a pre-approval. You'll provide personal details like income and employment information, and the lender will run your scenario and let you know if you qualify and how much home you can buy. For more information on the conventional 97 loan and other programs, see mortgageresearch.com.